Hey everyone, Coach Investor back to another video for today. So in today's video, I want to go a bit deeper into the reason why I sold Shopify and put that cash to work with Amazon. Amazon is my second largest position in my portfolio. So in this specific case, maybe the reasoning might just apply to myself. And for the sake of discussions in the comment section, I'm not saying Shopify is not a great business. I've always said Shopify has great management and will do very well in the future. But just for me personally, right now, so looking at the valuation metrics, the fundamentals, the growth story, it made more sense to use that money and just increase my position in Amazon. Of course, you might agree, you might disagree, that's fine. So let's start with a little overview of both companies. Obviously, when it comes to the numbers, it's night and day. Amazon, as we know, is a much, much larger company than Shopify. That might change in the future, right? Amazon might still be huge, but Shopify might also be bigger than today. But as of today, the comparisons with revenue just don't make any sense. In the last 12 months, Amazon's revenue were just over $500 billion, when Shopify's revenue were just over $5 billion. Now, when you look at free cash flow, of course, in the last 12 months, both of them are negative. Amazon is way more negative than Shopify, but one of the main reasons of my reasoning is that, well, Amazon is cutting costs. Amazon's fastest growing businesses are also the ones with the higher margins. So maybe you will see that free cash flow be positive again by the end of 2023. Now, when it comes to return on equity, Amazon is still positive. Even though free cash flow has been negative for a couple of quarters now, the return on equity is still positive. So when that turns from free cash flow negative to free cash flow positive, return on equity will increase as well. And to me, that's a very important metric. Shopify's, well, it was positive during those good years throughout the pandemic because of the growth that the company has seen. But since then, it's gone negative and, well, negative 32% return on equity, not great. Of course, again, that will change over time as their investment in the business mature, such as Deliver, for example, that will help the business in the long term. Now, with regards to gross profit margin, Shopify a bit higher than Amazon, but trending down a bit. Might also be because of, well, the maybe more dominating part of the merchant solution in the business. As that part becomes bigger and bigger, we've seen gross profit margin go down a little bit. Now, when it comes to valuation, I've put here PE to growth, but, well, you can't really compare both right now. So let's go with price to sales in the next 12 months. Shopify down 75% from a year ago. Sales ratio here is still 7 times, while Amazon's it's at 1.6 times. So already one extra reason why I made the switch. Now, before I continue with my reasoning, and again, this is not to be critical of people that keep on holding Shopify, this is just explaining my decision. Since I've talked about Shopify in the past, I've talked about Amazon in the past, so you deserve some explanation. And no, again, that does not mean that I'll stop covering Shopify. I continue to cover Shopify because I'm still interested in the company and might revisit this as an investment maybe in a year or two or more. Who knows? But before we continue with this video, would really appreciate it if you hit that thumbs up button and subscribe if you have not. And if you want to support me and this channel, do check out the links down in the description and in the pinned comments to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links as well, some of which might actually save you some money. So now a quick overview for both Amazon and Shopify from their last quarter. So still some growth in the online stores. Again, my reasoning behind Amazon and why it's still a tremendous business to own, especially now that it's back under $900 billion in market cap, and especially when advertising services is growing 25% year over year. AWS still growing 27% year over year. Third-party seller services grew 18%. I repeat myself, I would love to see this part here, the third-party seller services, increase way more. And I wouldn't even mind the online stores being down a bit. Why? Because the third-party seller services are more profitable for Amazon. Now, when it comes to subscription services, we've talked about the great impact, the big impact that Amazon Prime will have in the future for the business. At the start, it was, well, everybody was laughing at it. Everybody was laughing at Amazon Prime. Made no sense. Today, well, hundreds of millions of people are signing up to that service. Why? because it's great value for your money, which means you're saving time, time equals money, you're saving money. Now, of course, if we scroll down, we can see the stock-based compensation expense that has increased 75% year over year. Like with every big company, this was a big issue in 2022. Hopefully in 2023, this gets resolved a little bit. Costs should go down with those cost cuts programs. Let's see what happens. But obviously, this was a big issue and maybe one of the main reasons why also the stock took a major hit, down over 50%. Now, if we go and look at Shopify, of course, there is still some growth. Not that much, but there's still some growth. Merchant solution is growing much faster than the subscription solution, as we've talked about in the last video. If you look at cost of revenue, subscription solution increased year over year, quite substantially, I would say. Merchant solution as well, close to 50% actually. This reinforces my point I made at the start of this video. And of course, here as well, the expenses year over year have increased quite a lot. And if you want, we can jump to the stock-based expenses as well, which you can find right here. We went from $232 million to $407 million. Again, this is something that was tackled or is being tackled right now. We should see, let's say, positive reaction in 2023. Well, we're hoping to see a positive reaction in 2023. Now, going back to the Amazon and Amazon's news, we've talked about Amazon's new chip moves with AWS. So AWS basically is going to design their own chips in-house when it comes to high-performance computing. This is obviously going to challenge partners like Intel and NVIDIA. Now, they're doing it in-house. Obviously, we don't know the cost structure for that, but this might mean that, well, more performance for the clients that use AWS, which means why wouldn't you use this service out of the other two options out there, which are Google and Microsoft Azure. And just to be clear, the new chips will be designed to power the highest end of computing, supporting tasks such as weather forecasting and gene sequencing. This does not mean that they won't be working with the likes of NVIDIA and Intel anymore. It just means that right now, just like with Apple, back when they were still using Intel, but they were already designing the M chips themselves, in-house, I would say, this might be a bit of the same case scenario. Then touching a bit on the Amazon Prime subscription. So apparently Amazon has discussed a standalone sports app as Andy Jassy doubles down on Prime Video. Right now, you get everything under the Prime subscription umbrella. If, let's say, this comes to fruition and they do come out with a standalone sports app, maybe customers will be, well, forced to pay a bit more just to consume this sports content. Not that great for consumers, great for the company. Now, I do want to add a couple of extra things here before we move into Shopify's advertising business and the audience's product. So first of all, Amazon and Shopify will both be a success. Amazon and Shopify both have different missions, right? Amazon is also a different company today than it was 10, 15 years ago. Amazon today has a huge advertising business that is growing quite fast, as we've seen, has AWS, again, something that Shopify does not have, has Prime, which is something that Shopify does not have as well. So there are both players, yes, of course, in the e-commerce market, which, by the way, is still growing and growing because still most retail sales around are just offline. I think it was around 15% that was online, so still a long way to go. So two companies, yes, maybe playing in the same field sometimes, but overall, completely different. Now, Amazon did something last year with Amazon Buy with Prime, which means you could use the Prime services on websites that are not on Amazon, which to me is a game changer and might hurt Shopify. Will it definitely hurt Shopify? I don't know yet. Let's see the effects in the coming quarters and years. Now, let's talk about Shopify's advertising push to fill the void left by Apple's privacy crackdown, which equals Apple's wanted more advertising revenue for themselves, so they decided to call this the Apple privacy crackdown. So it's a tool called Audiences. We've covered this in the past on the channel. So the new tool allows retailers to pool their consumer data and upload it to Meta and Google's advertising platforms. Marketers are then able to target ads at lookalike customers who might be more likely to buy their products because they bought similar items from another retailer. basically you have to opt in for this. So it's a bit like, oh, customers bought this, you might also like that. Of course, the question arises, oh, is this not going to take some revenue away from myself and consumers away from my website and bring it to my competitors? Which was exactly the point that was raised. But to that, Harley Finkelstein answered, there's always going to be some apprehension about sharing data, but that's often offset by net. Am I making more money? Am I selling more? If the answer is yes on both, then it's probably a good thing. So then when you hear this, of course, we've talked about the huge growth in Amazon's advertising business. Shopify with audiences would like to rival that as well. And now that, well, the market has changed a bit in the advertising world because of Apple, maybe there's an opportunity for Shopify there as well to take a little piece of that big pie. Now, overall, again, like I showed you in this video, pretty positive for both companies. But overall, I do think that for me right now, especially in 2023, still some uncertainties out there, especially with the valuation. If we looked at both, Shopify down 75% from a year ago, still pretty expensive compared to Amazon. And again, Amazon was my second largest position. So to me, it made sense to add a bit more to that position since it was already such a high conviction position for me. Could be different for you. You could have Shopify as your number 2 position and Amazon as your number, 10 or something like that. And maybe you did the exact opposite. That's fine as well. I just thought I'd explain myself in this video. I just feel more confident, more comfortable, let's say, to have Amazon right now and to sell Shopify and just increase that position. And I repeat myself, I might revisit and buy Shopify later on in my investing journey because it's still an amazing company with great management. And so that's about it for this video. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.